Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back to the White Rabbit Trading. Today we take a look at the monthly statistics again since we have a new month starting. Let's get right into it. First of all, let's see how the last month played out. Here we can see that price hit the average wick target for a bearish month, but we saw no continuation afterwards. We also hit the average monthly wick for the lows, but in the end, it was neither a bullish nor a truly bearish month. However, as always, there are a few things we need to keep in mind. Technically, we have a monthly SFP. Without adding any additional context, this could lead to a retrace where price fills roughly half of the previous monthly candle. In fact, that has almost already happened, especially if price wicks the lower side one more time. This would also align with our previous range high area. And of course, if that range high fails to hold on lower timeframes, then we could start to see weakness develop. In that case, the monthly SFP would become another confluence supporting a move to take out the opposite side. That is purely from the monthly SFP perspective without adding any other context. So let's mark out the new monthly levels and see if there are any interesting confluences for this. And now we have the monthly statistics. So we can see that June tends to close positive more often than negative. Historically, it closes positive around 60% of the time. However, if we look at the average moves, we can see that June is more or less balanced on both sides. On one side, we have around 15% downside, and on the other, around 15% upside. The same goes for the average lows and highs, which are both around 7% to 8%. So overall, June looks fairly balanced. And I would say we first need to see what price wants to do here. Either we get a move higher first and form the high of the month, or we move lower first and form the low of the month, basically continuing to range within this area. Let's look at that on the chart. I marked out two example candles here. Of course, it does not have to play out exactly like this, but we can use them as examples to see what is possible based on the averages. The bearish monthly scenario would be a move higher first, filling part of the previous month's wick, followed by a rejection, and then a move lower. As said, this is purely based on averages, so the candle would look something like this. First a move up, then back down, creating a wick, and afterwards continuing lower. For example, taking out the previous month's low. For now, I am not personally aiming for this scenario, but that's exactly why I love statistics. They show me what is possible, not what I would like to happen. So that would be the bearish monthly scenario, with a wick into roughly the 78K to 79K area, while the average downside move points toward roughly 65K to 62K. I treat that as a zone rather than exact levels, because 65K is a strong area on its own. Now let's take a look at the bullish scenario. In the bullish case, we would see price first moving down and creating the low of the month before moving higher. Now, the average low for a bullish month is actually fairly deep compared to where we are currently sitting, around the 67K to 68K area. That would already be a move back into the range. If that happens, then we need to see what new data we have, especially how the move down looks. I'm not aiming for that right now, because as mentioned before, price is currently sitting on support. But if that support gets lost, then yes, I know it is possible to reach those lower levels. So that becomes a confluence that may be useful if the range high ultimately gets lost. If this turns out to be a bullish month, then the average gain would target around 84.5K. Basically another move into new highs. And if that happens, I think we will see increased volatility in that area, pops high. So we will have to see how price behaves when it gets there. For now, however, these are the two possible scenarios based on the monthly statistical levels. If we switch over to the timing statistics, we can see that both the highs and lows tend to form during the first part of the month. That is why I think if we see a rise first and it takes longer to develop, then yes, it is possible that price simply forms the high and rejects from there. The same goes for the lows. If we see a larger move down first, then I would start looking for the monthly low to form there. But we have to keep in mind that such a move would likely mean losing the range support level, which in turn means the upper part of the range could start acting as resistance. That is why, ideally, I would prefer not to see price break lower. I would rather see the low form around here and then price move higher. And if we do continue ranging, then I would prefer to see that range develop in the upper part of the structure. However, based on the averages, we know these larger moves are possible. So if we see price moving toward one of these statistical areas, that is where I would look to use the data as additional confluence. Until then, I am treating the current area as support. Now let's also see if any key levels actually align with these statistical levels. And these are the levels that I currently have. First of all, we have the range on the left side. From that range, I have the value area high, the point of control, and the value area low. Some of these levels align quite nicely with the statistical levels. The only exception is the bearish average close, which sits much lower around the 62K area. The monthly average wick for a bullish month aligns very nicely with the point of control of the previous range and also with an SR level that I have marked out. That level is a 4-day OB and has been on my chart for a long time. So if I see price dropping into that area first, I would be looking for longs. However, I always go step by step. That means I first need to see whether the current support level holds. That would be the SR level I have marked out here. It has confluence with the range high, although sadly not with the monthly statistical levels. If we also look at the timing, I do not really have anything that aligns perfectly with the timing for the monthly low. That could make things a little tricky, but we shall see. For now, based on my other analysis, I have a daily cycle time window forming here together with a lunar cycle time window. And price is currently hitting support, so I would like to see this level hold. But of course, price does not care what I like. All I can do is manage my risk. I know lower prices are possible based on the averages, but I am not going to front-run the idea of a level being lost while it is still holding. If it gets lost, then we can come back to that idea and look at the lower levels, mainly the mid-range area. For now, inside this daily cycle and lunar cycle time window, I would like to see a bottom formation develop within this support area. Only if that fails would I start looking lower. If this level holds and we get a bounce, then we need to see how long it takes. What I mean by that is simple. If we get an impulsive move higher, then price can reach the higher targets quite easily. But if price starts struggling and takes too long, moving beyond the average timing window for the monthly high, then I would not be aiming much higher and would instead start looking toward the next month. The same goes for the lows. If price bounces here, but continues rejecting and just hovers around this area, then I would simply wait for the next month where I have the next yearly fib time window and the next lunar timing areas. So in the end, it all comes down to what price does at this level and how quickly something happens. Because based on the daily cycle and lunar timing, this is a nice time window to form a low. Sadly, those tools do not tell us at which exact level. That is why I combine them with statistics and higher timeframe support and resistance areas. Sure, the setup can fail, but if I have a valid setup, I still take it and accept the loss if it happens. Now for the daily cycle setup, we use a simple trend line. Ideally, you want to see that trend line break to the upside and best case be confirmed with some momentum. If we look at momentum, we can see that it is hovering near the lows. That means momentum currently has downside pressure. It is not oversold or overbought. That is mostly retail thinking, and many people do not even know how to properly use a momentum indicator or RSI. But that is a different topic. What we have right now on the daily is downside pressure, and that will remain in place as long as price does not close above roughly 72.9K today. At some point that will switch, and ideally some higher timeframes will do the same. One of my favorite timeframes is the 3-day chart. There we can see that momentum remains bearish as long as BTC closes the next period, which is in 1 day, below 79K. Until then, the pressure remains down. That does not mean price has to go lower. It simply means momentum pressure remains bearish. This can also change through time. For example, price could go sideways while momentum continues lower. That would mean pressure remains down, but bigger players may be absorbing all that selling pressure, which in the end would actually be bullish. So I keep an eye on that and will let you know when it flips higher again. By the way, we also have a new monthly momentum pivot. Slowly but surely, it is forming a bottom. For this month, we need to keep the 71.1K area in mind. That is more or less the level we need to close above this month in order to cross back up. That would be the first bullish monthly cross in almost 9 months. So it is definitely worth watching. The 71K area will be important at the end of the month. Weekly momentum actually crossed down and remains bearish as long as BTC closes below roughly 75.5K. The 5-day momentum is also bearish as long as BTC remains below 82K. However, momentum is a lagging indicator. Price can still move higher, retest 82K, or even make a new high while momentum prints a lower high. That is why you should never trust an indicator on its own. Momentum can be a nice confluence tool, especially when weakness in price action is confirmed by weakness in momentum. But I see too many people randomly saying overbought or oversold and trading based solely on that. And I'm pretty sure that is how many people lose money. Now let's check the lower time frames. The 12-hour chart needs a close above 73K. We also get a new pivot in 4 hours. With price currently around 72.6K, it is not impossible, but it would require a push higher. The 6-hour chart is around the middle area and does not provide much information right now. It could still form a higher low while price sweeps the lows in this area. The 4-hour chart is the same story. For now, momentum remains bearish as long as price stays below roughly 73.6K, which is very similar to the 12-hour chart. The 1-hour chart tells the same story. Around 73.4K is the level to watch. Until then, downside pressure remains. Overall, the bigger timeframes are slowly trying to turn up, while the lower timeframes still need time to reset. The lower timeframes are more or less in a bottoming formation, but still carry bearish pressure, there, at least for now. And we are actually seeing that play out today. Now let's check the levels for today and see what is possible. The average loss for today sits below last week's low, so that is definitely a level where I would look for some kind of reaction. If price hits that area or forms an SFP below the low, then we would need to see a bounce back above this range. However, something important to keep in mind is that once price reaches the midpoint of the 2-day OB, this upper area can start acting as resistance. For now, it is still more or less support, and overall it is a larger support zone. But every larger area has smaller levels inside it that need to be watched. In this case, if price reaches the midpoint area, then on the bounce we need to see whether it can reclaim and hold above the range. Because if it starts acting as resistance, then more sideways action and even further downside become possible. Especially if the midpoint gets lost, then I would start aiming for the lower part of the OB, simply level to level. For today, the average loss level would be a possible SFP area, and that is where I would most likely look for a new trade, while also adding to my existing position. Currently, I opened a long last week and I'm still holding it. I am planning to add to it in this area. If this level gets lost, then I think I simply accept the loss and wait for more information. For now, I am also not closing the short trades. Yes, I already had some nice TPs, but I still have some shorts open that would help cover losses from the long and maybe even generate some additional gains if price moves lower. So overall, if someone followed along, they are probably holding a similar mix of longs and shorts as I am. I'm still holding the lower timeframe longs and not planning to close them for now. The same goes for the shorts. If price breaks above the 76K area, then yes, I think I would start securing more profits from the shorts because I think that could open the door for another move higher. If we take a look at the Revin indicator, we have a very similar situation. So the analysis there is fairly simple. Lower levels are support. If the current level holds, I look higher. If we get a daily close below it, then I start aiming for the next lower level, currently around 71.4K. The same applies to the local level. I want to see it hold. If it fails, then I look lower. If it holds, then the 76K area becomes the next important level. It is a key SR level on our chart and also an important level on the indicator. If we see a close above it, I will likely close part of the short position. So let's see how today plays out and go from there. For me, there is no new action on the leverage trades. I am simply holding my long and looking for opportunities to add. Only if this level gets lost will I reassess and move on to the next plan. TP1 for this long is currently marked at the recent high, but that can change. If we make a new low and I add to the position, then I will adjust the TP levels and update them in Telegram or in the next video. By the way, if you like this type of analysis, you can join the Telegram through Patreon. I prepared several strategy sections there, and those are the strategies we are going to trade over the coming years. So, if you are interested in real trade execution, then you are welcome to join. If you only want multiple updates per day with possible scenarios and charts, but no actual execution, then it is probably not the right place for you. I trade my own setups and I share them transparently. You also get some nice extras that I spent a long time building, such as the trading journal, strategy testing tools, and additional strategies besides the ones I actively share and trade. I do not have too many subscribers there, which is why it remains open. At some point, I will probably close it because I do not want too many people inside. But for now, it seems that many people are more interested in flashy content, influencers, and hype. In the end, I do not think most people get much value from that. What they often get is excitement rather than a process. People who are actually sharing their work, presenting strategies, showing entries, exits, wins, and losses, and explaining how things really work. That often seems boring to some people, but that is real trading. There is no fancy lifestyle, no pretending, and no trying to blind people with things they will most likely never have. The reality of trading is very different, and that is what I try to show while building things slowly but surely. So if you want to learn more and trade along with the different strategies, then you are welcome. I am also thinking about offering a discount in the future for people who stay for several months. Before doing that, however, I need to restructure a few things because I do not want people joining for 1 month, downloading everything, and then leaving. That is not what I spent years working on. In that case, a lifetime subscription would actually make more sense from my side. But for that, I would need a larger community first. So there are still a few things I may change in the future, but there is also still work to do. Without talking too much, I wish you a great day. I hope the plan is clear. If anything changes, I am always available on Telegram, and I will see you in the next one.